Well, I said it, and here it is. The market sweating the labor market data following the end of the government shutdown. And so we see some de-risking happening in the markets, and that's affecting our best penny stocks to buy now. And I talked about the snapping events that we could see occur. And now, mind you, I don't think that we had the most major snapping events yet, but I will say that we're definitely seeing signs that we're de-risking a little bit, if you will. And what that builds up for us is that next major opportunity, especially as those reports come out that can really inform us on the direction that we're going to see. In other words, should we plan for further look downward at support, or should we look for a drastic recovery, especially in the light of non-farm payrolls, jolts, unemployment rate, whatever it is that we can get thrown our way to give us some evidence of where that labor market is sitting. And then also we want further confirmation, further evidence that the Federal Reserve is going to continue cutting its rates rather than just holding them steady and taking away that expected cut in rates that we did have for December. So putting up the charts here for you, SPY, what are we looking at on the daily? Well, looking down at the 50 EMA, that's usually an area where we find support. Almost got there back in the beginning of October. Definitely came down there and found some wild support back on Friday the 7th, and then had a major bounce off of that. We could not keep hold of the 5 and the 13. So what we want to watch for, from where we're at right now, we want to watch for a push down below, and then we want to watch for a rejection further south. That's if we reject off the 50 EMA. If it holds up as support instead, that could be much better for us. So we definitely want to watch that. Now you'll notice this trend line coming across here, and also these two lines that I have up there. So if we go down to the 15-minute chart, I'll shed some more light on that for you. There we go. And you can see what happened was, well, pretty much pixel perfect. We fell down below, failed to recover as support, and in other words, if support failed, we found out that that was the new ceiling for us, and we pushed down once again almost pixel perfect to this trend line that's here, and that goes off these previous peaks that you saw me draw. If you've been watching my channel for the past several days, I talked about the importance of climbing over that. We did, and enjoyed that ride up, but then lost our floor on this thing, and now that floor is that trend line, and we're currently pushing down below that. And the 50 EMA on the daily chart is currently what's serving as support during the pre-market hours. And like I said, we want to watch that floor. If we push down through it, if we break it, we do have some further support that happens to be down below that. That happens to be about 643 up to about 653. We want to watch for that. Next major support after that is around the 50-week EMA that we have on here. It's going to be similar commentary on the Qs when we look at it. And let me go to the 15-minute chart here for you. There we go. And once again, we have that minor trend line coming down. We also had a more major trend line across the top of this thing, and we failed to hold on to that as the ceiling, so we went down and retested the floor. Matter of fact, we never even made it back up to these two due to some de-risking with AI and the big tech stocks that would be more heavily influenced in the NASDAQ 100 like we would see with the ETF that tracks it, QQQ. And this floor so far in the pre-market hours falling through for us, but we are at the next floor level that you can see back here previously, going back to November 7th, which is where we caught that support before. Most likely there can be at least some sort of bounce, which we might be seeing evidence of as I record this video right now. So going out to the daily chart on the Qs, what does that look like for us? Well, let's take down the technicals. There we go. And you'll see that we already are pushing down below the 50 EMA, and we want to make sure that we don't hit our heads on that. If we do, we could possibly send further south. Further confirmation would be through the EMA crosses that we get. So the 5, which is this green one, down over the 13. Even bigger would be the 5 over the 50, and then majorly the 13 over the 50. If we see that, the weekly chart is probably likely our winner. There we go, where we want to look. Just look at the opportunity that we get if we touch the 50-week EMA. I'm not saying that we get down here, but if we do, I think that's a very much giddy up moment, at least for the very short term. Now, mind you, something that we want to keep in mind here. Right now, the market's just afraid. It's not necessarily afraid with evidence. It's afraid really without evidence. So being scared like it is, it's much more prone to bouncing, and it's also much more prone to find support along the way because that bullish bias still overall exists. Now, mind you, with evidence that things are weakening, that could be more of a snapping event. So if we got non-farm payroll numbers that would be super low, below 7 million, that could be one of those events. If we are going to get an unemployment rate tossed to us, we want to make sure that it stays below 4.6. If it goes 4.6 or higher, when we do actually get that, especially in the higher we go above that, the worse it would be. So we want to keep that in mind as well. So that could do something to trigger fears of the SOM rule, and then that'd be with evidence, and then we could see that further snapping moment. Maybe that does push us down to that 50-week EMA, which is a major area where we could find that support. But we have to plan accordingly. Right now, it's just fear and speculation. And so with it being fear and speculation, like I said, we're much more prone to bouncing. And then we have to watch, are we overtaking previous peaks, or are we falling short of those previous peaks? Are we getting higher highs and higher lows? Lower highs and lower lows? Are we sort of chopping sideways? That's all evidence that we're going to look for this. So I do just want to give some quick commentary on IWM, looking more at the risk assets. We're down at a decent area of support. It gets even better once we start to drop down into about the 225 number. 223 is where that 50-week EMA is for IWM, and it's much more likely to get down there if we're going to drop a little bit more than what we'd have for the Qs or the SPY, because these companies are much less insulated against economic downturn, because the Russell 2000 stocks that this ETF tracks, the index that it tracks, those Russell 2000 stocks, that is something that we want to be watching out for. They will not be as able to handle economic distress as the larger companies that we'd find in the NASDAQ 100 and the S&P 500. Now, I talked about Bitcoin breaking below 100,000, and so far that's what we're seeing right now is that breakdown below. I'm looking down to 89,000 for that next major level for support, which is where we have the bottom over here during the highs that we had back in January and February. And then also we get the peaks that happen in here around March or April. So that could be an area where, and there is some choppy support on the way, but 89 could be that first major opportunity. If we look on a weekly basis, we're down below the 50-week, and we're also down below the 5 and the 13-week. And so that could be something that if those moving averages start to cross over down, the faster down over the slower, those are called bearish crossovers, and that could signal further weakness for us. So one of the snapping events happened, which is the Bitcoin down below 100,000. And so just take a look and see what happened to the penny stocks when we get there, with Bitcoin going down that far, IWM also selling off in that way, and then also NVIDIA failing to hold on to $200 per share and breaking down below some fairly critical support. Now, mind you, for NVIDIA, we want to be watching for this to see if we catch that support that happens to be around the mid to high 170s. If we lose those, we can be looking down to 167 for that next major support. And if we look on a weekly basis, right now in the pre-market, we are trading down below the 13 EMA. The 50, by the way, is right around 153. I think that if we do get down that low, that's that giddy up moment, an even bigger giddy up moment if we are able to make it down to 137. Now, mind you, NVIDIA does have their earnings coming up this month, and so it's Wednesday the 19th. So that's next week that we get those NVIDIA earnings, which, if there's enough economic distress, it would not be enough to turn the ship around for NVIDIA, not entirely, because most likely you'd have multiple compression throughout the stock market. And so we want to be watchful for that. Now, mind you, the stock market loves to climb the fear ladder. And so that's also something we want to be aware of, that right now with just those fears, we're seeing a little bit of rattling, a little bit of de-risking. It's not until we get those reports that we actually find that next direction. And most likely that'll be a snapping moment of its own, either to the upside or the downside, and just expect volatility along the way. Penny stocks, NVTS started making its return, could not overtake the 50. So we had that nice big jump, 22% on Monday of this week, couldn't break up over the 50 EMA, and so it's selling off. And then we had the 5 cross over the 50. That 13 is getting nearly to cross over the 50. Watch for that major bounce right around that 200 EMA, and the 200 SMA is all the way down here from 567. So your range on this is 567 to 675. That's a wide range for a bounce. And even if when you look to the left, we even have historic support that happens to be right in between those values. So if we do happen to continue selling off as we're even down below the 100 EMA, that's something to watch for. I would watch first around 675 to see if we get that bounce coming in. Notice the de-risking that's moving along with the markets. BigBear.ai. Let's go down to the daily chart on this thing. There we go. And you can see, there we go, as we reset the view, that we started to make that climb, and the market sold off yesterday, drug down the penny stocks. The market says we better go risk off on this thing for a little bit. And it's not just BigBear.ai that does it. It's a broad market thing. And so what that means is the broad market starts to turn the other way, starts to be like, okay, game on, everybody hop back in. We can expect these assets to start moving back the other way as well. Now, mind you, these are momentum plays for these penny stocks. So big news also going along with it can really help it out. So ONDS posted its earnings and had a great day yesterday. And then the market selling off the way that it did kind of tempt us down from being about 734, pushed us all the way back down to 656 just on that one candle alone. And then it finally closed this thing. Well, it actually did close at 656. What do you know? So pretty much straight across from there. So kind of tried to go giddy up and off to the races. And then we got a long top wick on that thing. And that could show that selling pressure, especially because we closed down the 50. Watch for support at the 5 and the 13, but also the background market bias I talked about, because it is important because it can further inform where we find ourselves. RZLV, I think, is going to be one of the big plays. There we go. When it actually starts to find its stride, I think it's going to turn on big directions. I'm looking down to 265 now for that next support on here, which does coincide with the bottoms of these values and these previous peaks that we have in here. And I think that when it does finally turn around, I think we're going to have a very, very large set of green days if that momentum is going to come back to RZLV stock. So I'll adjust those technicals and I'll come back here and report it all to all of you. If you guys want to see more of the commentary and technicals and my transactions, you can find me over at the Discord. I'm one of the panel experts over at the Stock Mode Discord. There's a whole team of us there to support you in your journey towards financial freedom and building alpha in your portfolio. 1,000 members over there already enjoying that entire ecosystem there to support you in your journey towards financial freedom, building alpha in your portfolio. And also check out those courses through Stock Mode Academy. Code word doctor when you sign up is going to save you $400 off the courses. Bundling the courses together is going to give you a bundle discount on top of that $400 discount. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.